Hello, good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. Today, Friday, 11 February. We are here to see what happened in the market yesterday and what is going on today. As all of us we know, yesterday the focus was on U.S. employment data and inflation numbers. Let's go one by one and see what happened. Inflation reached to 7.5% in annual scale in February, but in January, but in the monthly scale, it was unchanged. I mean, didn't change with the 0.6% of December number. It is good signal. Yeah, in the annual scale, in year over year numbers, we can see very high numbers at 7.5%. But if we go through the details and we see that month after the month what happened, we can see that the inflation numbers in November was fell down. It was decreased. In December, inflation was unchanged. In January also, inflation was unchanged. So the inflation didn't change in the past 2 months, almost. In a monthly scale, yeah, in the annual scale, we are in a 40 years high or 4 decades high inflation numbers. But as the Federal Reserve was also telling or talking about that, the inflation is going to be slow down in the next month, and then slowly start to falling. That's the expectation. That's what we can understand from the numbers. On the other hand, job numbers, the initial jobless claims, it was at 223K, while the market was expecting for 230,000 appointments. The applications is low, so we have lower application for initial jobless claims insurance, so the unemployment insurance. So this is these numbers together can tell us that market is fine, employment is fine, is improving. At the same time, we have the inflation in a higher numbers, so we need more tightening policies. But at the same time, we can see that we can see so much risks in the market here, down in the ground. When we are going to the real market, when we are talking about not just the numbers, not just the theory, we are talking about the real market, what's happening here in the real life. Yes, we can see the inflation is high, but we can see also the increasing speed is decreasing. So it means that we cannot, like a few months ago, we could see that the inflation in the monthly scale from zero point 0.2 to zero point 0.3, from zero point 0.3 to zero point 0.6. That was the scary. That was the scary, from 0.2 to 3 and then 6. That was very scary. Or even 0.2, 0.2 and 0, sorry, 0.1, 0.2 and then 0.3, 0.6. That was really scary, 3 times more. But now we can see that 0.6 became 0.5 and then 0.6 again, 0.6. So the increasing inflation, this fast increasing inflation is softening right now, and in the next month it can be fall down because we already have the oil price. We already had the oil price above $90 in the last months, in the past months. We read the news, we read the reports of the EIA and OPEC monthly reports, and both of them they're expecting to see the oil price in the next months a little bit lower, because the market, as we can see later in the chart as well, because the market is waiting for oversupply. Yeah, that means that the energy price going to be decreased. And one of the other reasons, we had so many closed ports, we had so many problems in the supply chain, we had so many problems in distributions, in transportation system, and these problems slowly they are solving. So it means that inflation cannot increase too much higher, and this can slowly start decreasing. Therefore, we don't. Yes, we need a little bit more tightening policy, but we do not need to go so fast. This is what the number is telling us. Therefore, expecting a 0.50 basic point rate, increasing the rates in the March, is a little bit out of expectations. A little bit. I don't know. It can be so hawkish, it can be so hawkish, and it can bring the unneeded shock to the market. So that's my expectation. That's what I can see in the market. At the same time, look at the China. Look at the China. They are again easing. They are easing. They're making it easier to get them loans. The ratio, the saving ratio, is getting lower. So it means that China is trying to support the economy with pumping the cash in the market, with the giving them more loans. You look at the yesterday's loans; it increased more than 9%. The loans, the new loans increased more than 9% in China. So that means the market is improving in China. They are still supporting their economy. We cannot expect that, okay, well, China is supporting the economy going forward still, and say that, the US, you should gonna stay here because the inflation is scaring. Inflation is not scaring. Inflation is not good, but it's not scaring. That's the situation. That's my expectation from the market. Therefore, let's go see and what that. Uh, looking at that, looking at the charts with the mentioned data, we can say that, okay, the market is again high. This was what we were expecting, but it's at 24, up from 20, almost 3 to 24. It's not too much high, but still the market risk is high because we have the geopolitical problems also there. So but this geopolitical problem is not a geopolitical problem that can affect the U.S. economy directly. And even if it can be better for U.S. economy if the war happened, because they're gonna sell more weapons. Anyway, the situation is there. While the market risk is falling, the volatility index is falling, the volume also is falling, which means that we cannot see too much pressure on the market volume. It can be flat in these areas. But U.S. dollar index, yeah, inflation is scary. Inflation is increasing, and we can see the U.S. dollar index above 96. This is totally normal, because inflation, the US dollar almost was 97.50, 40 some, and fell to the 95. So it's expecting, it was before we talked about that the US dollar can be between 96 and 97. It can be around these areas, and it is normal because we're expecting to see a little bit more tightening policy with 0.25 rate hikes, which is actually it's under question still, and in March, but it is normal. About the gold price was increasing, but what happened here? The gold price, you can see after the US, after yesterday's US data, you could see the 2 years bond, 2 years bond yield at 1.5%, and 10 years bond yield above 2%. So increasing bond yields can limit the gold bulls. At the same time, US dollar also is increasing. So gold against US dollar can be a little bit softer. But at the same time, look at the stock market. Looking at the stock market, we can see the downtrend in the stock market. At least, even if it can be the short term, but it's a downtrend in the stock market. Weakening stock market. The money flow says us that the gold should be in the spotlight. Gold should be in demand. Therefore, more bears in a gold chart, it is more bears in a gold chart. It's not something that we can see it for a longer time. So gold still can hold its demand even with the slower speed, which slower piece, which we talked before. Gold is in a very slow uptrend, very slow uptrend for 2022. Therefore, a little bit downtrend can give us just more opportunity to buy for the gold. About the oil and the gas, about the oil gas started to increase after falling down. Gas with this increasing risk again in the borders. We know that last night President Biden told that all African citizens in Ukraine should leave the country, because if there is something happen, we are not going to send the military to take them out. Therefore, the market is again feeling a little bit more risk in Russian and Ukrainian border, so we can see the gold gas price can increase more. Same thing for WTI, for oil also, increasing the oil and the gas prices from the fundamentals that is expected with the news, that fundamental news that we have in the market. Therefore, gold is actually about the technical side of the, also about 87.80 gold oil is in a very clear uptrend. About the gas, if we again pass the $4 above, we can put the $4.40 and $4.70 in the spotlight. For the stock market, the news that yesterday we had, it was not in favor of the stock markets, but it is not I mean, the numbers were was the numbers in the monthly scale were not scary. Therefore, we can see again as we were expecting a little bit softer in the market, a little bit higher in the market, softer in the market, and we can see that very we can see the side movement with the uptrend tendency in the market slowly can change it to that. Same thing for Nasdaq and same thing for Dow Jones. We can see if Nasdaq can be a little bit more under pressure before start to increase because higher bond yields can put the take stock a little bit more under pressure. About the cryptocurrencies, about the Bitcoin and Ethereum, increasing this movement here, this volatile market here was mostly because of high and down, up and down US dollar, up and down in the US dollar chart. At the same time, the market risk is increasing. Look at here, the volatility of the market. The volatility is increasing. The more risk in the market can put the risky asset under pressure. So therefore, we can see the Bitcoin a little bit more under pressure, same as others. But it's not mostly actually because of that. We can say that the market still is waiting for update from the White House about the cryptocurrencies. This is going to be soon. We are waiting every day. We are waiting for that as the White House so that they're gonna have the Biden gonna have the order for that. So we have to wait and see that what's the United States will be deciding about the cryptocurrencies market. Therefore, the market also will be very caution, very slow and caution before having that. Same thing, you can see that Ethereum from the technical point of view, as we talked, 4,000 with a 60.8%. We have to see in the daily chart. We have to see the candle above this, which we couldn't see. Closing above 44,600 can increase the market for 600, 700 can increase the market towards 52K, but still was the Bitcoin was very big to pass the 44K 600,000 US dollar. About the Ethereum, also almost the same. We can see it is under pressure under 3,400 US dollar, and before also we're talking about that any bulls should be above this level, while and now 2,800 again we're back, and 2,800 can be the next target. Same thing can be in the Ripple chart. The Ripple under 82 cent, we can again put the 57 cents in the spotlight. Let's see what's going to happen. But about 82 cent, Ripple can be under pressure. The any bulls should start above 92 cent. Under the 92 cent again, we can see a little bit more pressure in the stock in the cryptocurrencies market. But generally, they are waiting to see what's the Biden's order, executive order would be about the cryptocurrencies market. About the Euro USD, weaker USD yesterday sent the Euro USD again above 1.14, but still increasing again or regaining the US dollar can put it under pressure. So therefore, the Euro USD still is under pressure, and we cannot see too much demand for Euro USD chart, and the US dollar will be more in a demand. Same thing for the pound can be seen here, and uptrend in USD JPY is totally expected above 1.16. Before we were talking about that several times that the Japanese yen is under pressure for the several reasons. Most of them is because of the monetary policy that can put the Japanese yen under in the sell position. Okay, this is the market situation generally. Hope it was useful for you guys. And if you had any question or if you want me to cover something more or something less, please let me know. Oh, then let's see about the economic calendar. What we are going to see in the market today. Yesterday, I should remember. I should mention that yesterday we had bill actions, 4 week, 8 week, and 30 years bill actions yesterday, which it was also the new bills in a market, new auction in the market. Usually also will increase increasing the yields. So therefore, one of the other reasons that yields was increased is because of the new auctions. Today, GDP from United Kingdom will be very important for the stock market, for generally for the market, especially for the London stock market and pound. And then Fed monetary policy reports will be out today in the US in the few hours after US the market begins. So Federal Reserve monetary policy report and Fed monetary policy report and interest rate in Russia and new loans and yeah, new loans news also yesterday we had it from China. Yeah, interest rate from Russia and Turkish retail sales will be also here. Industrial production from the Turkey as well, and pound will be in the spotlight today for the British GDP numbers. Okay, that's it, and today this is all what we need to know for today. And be careful about that in the stock markets and generally in the markets, the stock and currency, cryptocurrencies. Hope it was useful for you guys, and see you again tomorrow. Have a no, not tomorrow, Monday. Have a good weekend. Bye bye.